Hello, everyone. It's Webcast 23 for MarketsFlow's portfolio performance, and a great Friday to you. What a week with the markets. This is Tom from MarketsFlow. It is the 4th of October, and we're recording this midway through our Friday session as we bring you this weekly performance for the week ending October 4th, 2019. It's been a while I did this with Adam. How are things, Adam?
I'm well, thanks, Tom. I've got a coffee in front of me and a fairly comfortable seat, so all is well.
I'm glad you're enjoying yourself, Adam. Good. Thank you. This is a Webcast 23 for MarketsFlow's portfolio performance for week ending 4th of October. Our podcast is recorded every Friday and it is uploaded immediately on YouTube. Please subscribe to our channel so that you can receive it as soon as it's available. MarketsFlow is an FCA authorized robo-advisor and digital wealth manager. We're also SEC authorized. Your deposits are protected by the FSCS for up to 85K. Go to marketsflow.com to learn more about our portfolio performances. You can download our mobile app on App Store or download it on Google Play. You can sign up in under 10 minutes and start investing from only £10. Before we start, I'd like to run through our disclosure. Your capital is at risk, and any financial performance figures refer to the past, and that past is not a reliable indicator for the future. With that said, let's dive straight into the important subject. How did the portfolios perform this week, Adam?
Well, up to now, and as you rightly say, we're only partway through Friday as we speak, with a little time to go before the close of the market. High growth is up 0.81% this week. It's up 6.27% since the 4th of June. And for the growth portfolio, the two equivalent figures are 1.02 for this week, 6.64 since 4th of June, and ISA 0.78 and 4.29%.
Thank you, Adam. That's great to know. And how has markets as a whole performed this week?
Well, obviously, again, it's not yet the close of the day, but as at the same time that we measure the portfolio's return, the market, meaning S&P 500, was down 0.95% measured from last Friday's close, and the week, from the market's point of view, has consisted of a flat day Monday, then 2 down days, and then 2 up days. So that's obviously a simplification, but what has happened during each day sometimes saw the VIX, which is the pricing of volatility that affects our option trading fairly strongly, fluctuate quite widely. And it's not even as if you could necessarily tie these moves particularly to the many data releases we've had this week. So it was a rather more interesting week in markets than some recent weeks have been. Those that are the least interesting are probably those that just creep up very gradually for 5 straight days with not much going on in between. So a bit more lively.
Great, thanks. So just want to make that point clear. So we've had a negative week on the S&P, down about 1%. We are up on our portfolios anyway, ranging from 0.78 or 0.80 to 1%, just over 1%. Now, with that said, I know this portfolio performance, which is sort of from 6.64 on the growth portfolio, how does that compound to, I know our portfolios have been running for our clients since the 4th of June. How would they fare if we were to analyze that on a compounding basis, Adam?
Well, if you were to take the same run rate that's occurred during those 4 months and expand that out to a 1-year period, that particular portfolio, growth portfolio there, that equates to about 20% a year. If that same rate of return was sustained over 12 months, and it's worth saying, of course, that the period from early June to now, there's not been a stellar period for equity market indices. So it's pretty good.
That's great. I mean, you make a great point. We've clearly outperformed the S&P. I believe since the 4th of June, S&P has been roughly around the 4.70 mark or so. So on a compounding basis, that roughly is around about just below 14 or around the 14 to 15%. So yes, Adam, and I think another interesting point we should make there is that unlike the S&P, which is fully invested, MarketsFlow is not fully invested in terms of its allocation. Would that be fair to say?
Absolutely, and as a consequence, looking at a series of returns of the MarketsFlow portfolios, whether you have a series of weekly returns or a series of monthly returns, you plot that on a chart or measure volatility, it's got nowhere near the volatility of the S&P index.
Indeed, and that's really been our kind of our driving USP. That we generally target outperformance, but we also don't usually dive into we don't have the same exposure to volatility as is experienced by other asset managers or by the S&P itself. So great. Adam, on the allocations within the portfolios, how are we looking at this week?
Well, we displayed some quite large swings of our own this week, not in terms of performance, but in terms of how heavily or lightly allocated we've been. We were quite active in terms of adding exposure, taking it away again. At times, we were greater than 50%. At times, 20% or even less. It's just the nature of how the market's been and how we felt best to respond to that.
Yeah, great point. And as I noticed, we've probably been the lightest ever. Would that be fair to say? We've just got some options which should expire without being assigned, but we're going into next week almost uninvested.
That's right. I mean, certainly as we stand here in the closing half of the latter half of Friday, we've got very little exposure out there.
This is rather impressive. So, okay. And what were the real drivers of how the portfolios made money this week? I mean, those figures show around 0.8 to 1% positive returns for the portfolios. The market's almost 1% negative. How would you attribute that across the kind of risks taken and types of positions?
It's a great question, and often we find that one of these factors or two of these factors are unable to produce anything in a particular week, which is frustrating. But I think we've had a contribution from several different areas this week. Variable allocation to market risk as a whole, you could call that variable beta, some people do. That was a fairly significant part. So trying to make sure we're more heavily exposed when markets going up and less heavily exposed when markets are falling. That was certainly a significant contributor. Secondly, the market wasn't showing quite as much dispersion this week as it was in some of the earlier months of the summer, where we commented on the peculiarities of that. So stock picking opportunities, in theory, were less this week. But I still think we made some reasonable contribution from stock picking. And then there's the matter of option writing. And this was a fairly sizable part of what we did this week. And as you say, we go into the weekend extremely light. Obviously, there's a couple of hours left, but I don't think it's very likely we're going to be loading up.
I agree, Adam. Thank you. And what do we look forward to here on over the next week or two, Adam?
Well, we are starting to get towards earnings season. Third quarter figures getting reported. That starts soon. So let's see if that provides the market with some impetus or fuel to take it somewhere in either direction. There's lots of anticipation around monetary policy meetings with hopes and expectations, more easing, and so we'll see what comes from those. The various economic data releases, again, which are being watched with a view to trying to get a fuller picture as to how much various economies are slowing down, which will also, interplay with the what happens to monetary policy. Then there's also the UK's, I should say, possible rather than definite exit from the EU at the end of this month. It may well be delayed, but I think everyone's utterly fatigued of even hearing about it. So there'll be news one way or another. Various different investors are going to focus on in their different ways. We see these events as potential catalysts that bring with them the risk of little bits of market disruption here and there. But our investing process doesn't depend on trying to forecast them. Obviously, as you've built this process, we're far more interested in the behavioral characteristics of markets themselves.
Right, great. Adam, on a lighter note, it's getting very chilly in Canada, in Montreal. What's the weather like back home?
Well, it's just a little bit chilly in London too. At least it hasn't rained today. That's the one positive thing I can say.
Well, I hope it's going to be sunny in the weekend. Okay, so that brings us to the end of our podcast. Thanks for watching or listening to us on YouTube. Please remember to subscribe to our channel. Have a great weekend, and we look forward to our next Friday's podcast. Take care.